Welcome back everybody into another daily recap. Today was Friday the 27th of January, and as we're going to see here, this was the hourly time frame, the hourly chart, and we can see here very clean that what I was looking at was this previous PSA. This is the daily PSA 1917.7. Price already doing overnight made a new lower high and was trying to make a new lower low. As you can see, after the rejection of this strong 4-hour PSA, price was trending bearish with a new lower high, rejecting this previous level at 1934.1, and then was making its way down. Of course, we have this strong, as I said yesterday, this strong band of liquidity, of buy liquidity. As you can see, every time price went and visited these lows, snapped. Not like here, snapped above, snapped very strongly, snapped. This is showing you how this level 1917, 1920 are full of liquidity for now. And we probably take a strong catalyst for it to break below, for price to break below. So what I was looking for was buys at 1917.7, of course buys above 1929, possible rejection at 1934.1, and eventually if price went above all this price action. Of course, as you can see, this price level was this price level was for both the sells and the buys. But of course, why? That's why I put that we have to see strong confirmation at these two levels at 39.5 or 34.1, because I will need a clean break retest above these highs to have the confirmation of that liquidity here, that this double bottom was absolutely the liquidity grab to possibly make a new higher high. Otherwise, if I saw a strong rejection at this level again, that's where I would have taken sells. So let's see what actually happened on the chart. Of course, here on the, as you can see here, on the hourly, we can see that price actually rejected. So this one was when I made the analysis. So we had a slow London where price moved above 1923.5 and then moved and broke and retested 1929 to go and revisit 1935.1. As you're going to see, that's, I mean, it's 10 pips above level where I wanted to see the sells, and from there was like 200 pips on the downside here. And again, as you can see, as I showed you, buys from 1917.7, you can see how easy, how clean that would have been. That's even less pips of drawdown, and that's where price snapped back for more than like 140 pips again on the upside this time. So overall, on the hourly is still a range. Price was in a range, but as per trade analysis, then trade ideas on the scalping side, this one was really good. So as you can see here, my analysis was done around 7 something, and we see a double bottom was done at 7 exactly, I guess. Because we were above, we were at 1924 at 7, exactly 7. So that's where we made a new a double bottom at these previous lows, and also PPL, which is the liquidity. We are 1922, 1923, and we could have taken, I was also looking for some buys above here, and but also doing London, what I was looking for, okay, I saw that London Open failed to break below these lows. I think it's a PPL. No, this one is not a PPL, but the retest of the key level, multiple retest. Then what we made is that we made a new higher high. So we made a new higher high, and that's where, as I told you, I placed my Fibonacci / retracement tool, and that's where I saw it live about this rejection at 61.8. Also, this is a deeper liquidity to the almost 75% retracement. So that means that it's a deep liquidity grab. So of course it's a PPL here, so you can also see it as per market structure, but having a number over there, it makes sense. So that's where you could have taken a buy on the upside due to scalping reason. This one is a scalp. It's not based on the intraday trade ideas, because as I told you, there is no buys at this level. But as you can see here, price went very smoothly above on the upside, and that's where you could have taken the first buys. And again, what you see during this low, this is very slow but still trendy. If you were in a trade, that would have been a very nice London session. We see that we make a new higher high. What I do is that when I see this price action, what I immediately see is that I try to see it as like a high time frame. This is on the 1 minute, yes, but I try to look at it on a high time frame. So let's see, okay, let's see where did the impulse start from. And this was the London lows, basically. The London last impulse that made higher low that made the new higher high. So as you can see, I'm not taking it from here to there, from here to there. That's just for a quick scalp, but I'm not looking for that. I'm now looking for a high time frame move. So when I see this deep and strong aggressive bearish movement, that's where I immediately go to look at. I don't mess with this price action. Yes, you could have taken these buys as well from like here to there. You see it's a 61, it's a retest of the key level. This is also a retest of the 1920, 29 as I told you as per analysis, but also looking at this nice retracement, that's absolutely nice. 61.8 is holding, and now in this case 61.8 is holding and is helping you because maybe you were waiting for a retest of exactly this level, and maybe that's you would miss a trade. So that's also why I like to have numbers attached to it. That's high time frame retracement, buys above 1929, because when you see that there's this candle confirmation and it is staying above, that's why you could have entered and taken your scalp, 45 pips scalp on the upside. And again, then what we see is that, of course, this is also London, pre-New York. That's not something that I'm more keen to look at New York session. That's what I backtested most. And as you can see here, this is exactly the retracement, the rejection of what I was telling you from the from this price sensitivity here. So 1934.1. So you see, you have no single candle closing strong above this level. So you have no single confirmation of the buy analysis. No, this didn't happen. You cannot take these buys. What you see is that yes, you have a little bit, not even liquidity grab, and then what you have is the first liquidity grab, then you have the retest of the level exactly on the dot for pricing continuation down. So that's your confirmation of for a rejection. That's your confirmation, and that's if you have the trade this trade idea, that's your entry as well. This is why when you see this bearish candle, you take your entry, and you see with this volume that's a very good opportunity for entering sales and taking full advantage of it. 2:30 was also the time of the PCE coming in, and it was I think was slowing down or was the same, but didn't hold much of a weight. As you can see, failure to break above 1935. Look at the PPL here, how the perfect rejection, 3-minute candle failing to even close above this PPL, and the sort of key level. This is a PSA that was charted up from the morning. As you can see here, strong rejection. This is a clean 60 pips. Of course, you will see that from 1934, it will be like around 70 pips down to where the price will go. But that doesn't matter because you never know what is happening. So in this case, that's what you will take, in 60 pips. And again, maybe this one would have possibly been a loss because you see that this is the end of the 4-hour candle. We have the pullback and a strong bounce from the key level. Yes, that would have been a loss, and that's absolutely fine to take it because otherwise you will miss it. I would prefer to take it and take a loss than ideally than to take have a miss opportunities. But anyway, okay, maybe you take your loss. Then what you identify is that you have this last impulse, and these are seen live. So I was looking at them live, and you have this last impulse on the bearish side. So we are breaking below 1929, so we are going into the confirmation of this bias here, 1934.1. So that's, I'm not saying that there's no pre-plan analysis, yes, but look at the market structure, look at the how the price is moving. So that's where I take this Fibonacci retracement, and that's what it matters. It makes a lot of sense. It's not just about Fibonacci, it's about where it is retracing, where it is reacting. And as you can see here, price is reacting to these previous PSA, these previous lows on the left hand side, which are also as well the key level 1929. It's your key level of reference now. So that's when you have this end of the pullback, you enter, that's your 60 pips. In this case, you could even take like a 15 pips stop loss, but 60 pips in a few minutes down to the on the downside. And that's, again, you repeat it. This is the same that happened yesterday. You just repeat it. Okay, this is the last impulse that is started. This is the last low. Yes, we are coming to the band. This is the band of liquidity that I was talking about before. But yeah, if you are scalping, that's also what you see also that you should take into consideration, the sells. That's why in this case you take it, you have a clean reduction. But that's also where I need to understand that where is the, as I said yesterday, where is this price reacting from? It's reacting from a strong PSA. And as I said yesterday, every time price is reacting to this PSA, then you have buy liquidity. So even if you did it like this yesterday, this is doing Asian, yes, you take the 50%, it's a loss, because where is this liquidity coming from? It's coming from a strong price point of interest. It's a strong liquidity area. So again, this is the same that happened today. So this one would have been a loss, or maybe if I was being agile enough, that would have been like a 30 pips or even 20 pips win, because of the understanding where the price is making a double bottom, because that's what I also understood. I saw it live. Yes, we had the consumer confidence coming in better than expected, better than previous, but as you can see, the price action was quite messy. This one was seen live, this double bottom, and as you can see, is a double bottom at a strong liquidity area. As I said multiple times, look at the PPL, how it is reacting to, and it's being very strong, giving strong confirmation here of this double bottom for the quick buys. The quick buys, as you can see here, is 45 pips win. But then, of course, you also always have to be adaptive. Yes, now you're thinking, okay, we're coming from a buy area, buy liquidity area, so let me put the retracement tool. Yes, we failed to break above 1929, so maybe, of course, depends. If you're scalping, you can take it. Yes, we didn't make a new high, so this impulse is not coming from a new higher high being printed, so maybe it does not make a lot of sense. But what is making the sense for me is that this liquidity is strong, should be strong. So we took the double bottom, yes, but as you can see, when we have a picture perfect retracement to 75%, which is also the retest of the key level 1923.5, yes, we have a bounce, but it's a short-lived bounce of around 20 pips, because price is now probably due to the consumer confidence giving strength to the dollar. That's where the price is melting down now. Now what is happening is aggressive impulsive break of the retest of the previous lows. This one, if you can see it here, these candles are huge, and we have a clean picture perfect retracement of these previous lows. It's pretty impossible to enter unless you enter when the candle is closing at this level, or you enter doing with a live candle. But this candle could easily be a wick and then close bullish, so then it will be a loss, easy loss. Then the last one of the day is that, of course, as I told you, I was looking for buys at 1917.7. That's exactly where the price went with this aggressive. This was probably a liquidity vacuum, I would say, because look at the size of the candle. We are approaching London close, but we have, in a few minutes, we have 60-70 pips already. But what is also most important to see is that we have a double bottom. So this one was seen, absolutely seen live, and I'm going to show you. And here, as you can see, I was already looking at buys. Look at this candle closing, how it closed with a rejection. This is a pretty easy to see liquidity grab, but of course, yes, this would have been a very aggressive entry, but otherwise you see that really at the same minute, probably, yeah, the next minute, 8 seconds, 7, 8, 9 seconds later, that's where what I was looking for, my bias, and that's also where the price went. As you can see, this is the aggressive one, but that's the double bottom and the continuation bullish. So as you can see here, identifying and staying very trusting your pre-planned analysis and trusting your PSAs. That's where this double bottom, let me show you better the double bottom. We have the retracement and the touch exactly of this daily PSA. The PPL here, yeah, it's also the PPL. If you see it here, we are touching also the PPL. Of course, 70.7 is like 0.2 pips away from the PPL. PPL is 675. No, this is 500, so it's we are like a couple of pips away from it. But that's where you could have, this was a clean, very clean double bottom and pre-planned analysis. So you saw the what I was looking at it live, and this one would have given you a very nice and even scalp would have been easy. I mean, in a span of like 5 minutes, not a single bearish candle to give you fear. That's also why it's most of the times the best trades work out at your entry. So if you enter here and you stay in drawdown, that's not working. If you enter here, or if you enter here and it's immediately going in your direction, so immediately going into your direction, that's exactly what the best trades are. Exactly this rejection. You understand the retest, the double retest, double top, we'll say, and then immediately going into your direction. Maybe you have a pullback, you see if it's breaking above this previous PSA, but it's immediately going in your direction. You can manage it when you're in profit. That's where the best trades are. And again, this one would have been going bullish for like 130 pips, and then yes, you would have got a break and retest here, but that doesn't really matter. I don't know where you could have taken this retracement. Yeah, this is a 75% retracement after this PPL. It's a 75 on the dot. That would have been like 50 pips, but now we are already very late into New York. So as you can see here, I really wanted to show you this part, all these trades, and especially this nice rejection and this nice double bottom at this liquidity area. That was a pre-planned price point of interest based on the daily time frame that I was charting up. So this one was the live trades, and seen live. This one would also been a loss, but this double bottom, as you can see here, even this one was a seen live for a quick scalp, and this one was seen live already at my PSA already with this bearish candle. So that's a high risk, high reward entry. As you can see, yes, maybe you go back to your entry a little bit, but then you never break below your PSA, and that's 100 and plus pips. So that's confirming why I will always try to make a good analysis, pre-planned analysis, and then print it, because I need to remind myself how my price and what I'm looking, because otherwise I get zoomed in and I look for buys, then I forget that maybe 1929 could have easily been my rejection point. I don't know, maybe I see I'm stuck into a bullish bias, and I forget that this is a strong PSA, especially during Asian. Look how strong it was, and I still need to delete this. And as you can see, this one is the late New York yesterday. 2 wins compared to today. 2 wins, 2. So that's absolutely nice. That's why also gold, when it's moving into a range, always gives you nice opportunities to enter and to take good trades. And look how this snaps above. This one was, I think, 1 ppl above compared to, yeah, this one was a ppl above the daily PSA. But look at this reaction here, how aggressively it snapped back up and then went for more than 90. I think also, yeah, all the way back up, 130 pips, all the way back up to this level. During Asian, we had this first reaction. And again, this is exactly the same reaction that we saw today. So you have the first tap, then you have a pullback. It looks like it's going to continue bullish, but then it fails to break. And this is your candle entry. This is exactly your candle entry. If you look at here, this is the candle, perfect candle confirmation. You can even take 15 pips stop loss. No, yeah, that would be risky if you want to cover this area, and that's, I don't know how many pips. That single entry would have given you 130 pips, PPL to PPL. And you can see, when do you have any fear here during Asian of being stopped out? Not here, here no, here no, because you are staying above. Let me see the PPLs. Look at here. So let me, yeah, it's fine. So you have these previous lows and it fails to make a new high. So you have this retracement, you are scared, but it fails to break the PPL. Then what you have? You have this pullback, just straight bearish, retest of the PPL. Then you have the retest of these previous lows and fails to make new highs. Then what you have? You have these previous lows and price is not even retesting it. You have the retest of the PPL. I mean, look at here. You don't have, you have like 4 times, if you are looking at it, that you are maybe, okay, where is it going to break or not? But in the span of 3 hours, you only are there for 3 times, 4 times, not even being scared. And that's absolutely the same that happened today. A little bit more aggressive, but look at this. Again, it's exactly the same. You have your, I don't know what is this. You have the first one, you have the second one. This is a little bit more aggressive. Of course, we are now in New York. The volume is much bigger. But again, you take your one, it's 100 and plus pips. I mean, you could have gone all the way back down 160 pips. So let's see the same thing that happened here. So enter, price immediately goes in your direction. You have the first pullback, it fails to break above the PPL. You make a new low, you have the retracement to say, okay, yeah, now I'm scared, I'm getting all my profits back, but you fail to break above the key level. You have multiple very engulfing bearish candle, also this bullish, close bullish brush, but look at this candle close. If it was like a few seconds more, that would have been a bearish candle. Then you go a deep in profit for like 110 pips. Okay, you see, this is double bottom at the PPL. You are scared. Yes, I understand. Of course, now you don't have your full position open, but look at here. It fails to break above the key level and this previous PSA. It fails to break. So what are you scared? And look how this is reacting. It's not reacting poorly, weakly, and you don't know if the sellers are coming in. They're coming back strong here. And then it's just going down. So that's absolutely nice. Those are the trades that you should take, 100 plus pips, and that's absolutely insane. Very, very nice. I love the price action, and I'll see you guys on Monday.